some of the earnings then, and we're going to be talking about Happiest Minds, and we are being joined by Venkatraman Narayanan, Managing Director and CFO of the company, as well as Joseph, who is the Executive Vice Chairman of Happiest Minds, is also joining us. A very good morning, gentlemen, and thank you so much for your time to ET Now. Venkat, coming to you for the first query, the main concern is on the guidance because you have cut your earlier 25% growth guidance. Now, this is on the account of the acquisition delay, or you have cut your organic growth guidance as well?
So, firstly, a decent quarter. We've shown growth of about 3.6% in constant currency, and for the half year, that's about 12.7% year-over-year growth in constant currency. So a decent quarter, but however, taking into mind the current situation in the markets that we operate in, we took a deep dive into how the guidance for the rest of the year should be. As you know, we had made a guidance of 25% at the start of the year, which was, we had not made a distinction between organic and inorganic in that. So we were pursuing one large acquisition and a couple of other ones. And as we stand today, there is a delay in the larger one that we were thinking and talking about. So to that extent, we had to revise that guidance. So now what we've done is, for the rest of the year, we are guiding for a growth of 12% for the year on an organic basis. And if the acquisitions that we are talking about materialize, that will be in addition to what we are saying of 12%. While we talk about revenue guidance, we have not made any change to our EBITDA guidance. We are holding on to the 22 to 24% on that one for the rest of the year.
Well, thank you so much for that understanding, Joseph. But just to follow up, so when will these acquisitions fructify? Any timeline that you can share with us that these acquisitions will help your numbers, and which areas are you looking at adding capabilities in?
Yeah. So, what I would say about acquisitions is that they tend to be binary. Either you close them or you don't close them, right? And right now we are in, as Venkat mentioned, we are in discussion with a few candidates, and we are, we want to make sure that we take the right decision, looking at the various criteria that we have, which I'll get into in a minute, looking at the cultural aspects and making sure it's a company that is in the digital space, that's not a turnaround kind of story, and aligns with the kind of culture that we have. Those are base criteria that we have. But having said that, there are 3-4 other criteria that we're laying out. One is to look at it from a market perspective, and as we discussed earlier, we are in the process of building deeper domain capabilities and moving from a technology-oriented company to a company that has domain and vertical capabilities that can help customers and consult customers on upstream opportunities. And so we're looking at that. We have a few sub-segments in our chosen domains that we've identified where we would like to build deeper depth and get more customer case points. So that's one area that we are looking at, for instance, in insurance, or if you look at in healthcare, medical devices maybe. So a few such areas that we've identified. Again, if you look at it from a technology perspective, we do have depth in quite a few digital areas and digital technologies, but within those technologies, like take the low-code, no-code area, there are several platforms, and we've identified a couple of platforms that we think would get us better traction in the market. So if you find somebody, a customer that's focused on one of those platforms, or in the AI space, there are a few platforms, or in the data area that are doing really well, like for example, Snowflake. We do have a few customers, but if you could get more critical mass and depth, that would really help us. The third area we are looking at is getting into either building more business in some of the geos where we don't have as much presence, like let's say Europe or ANZ, or even get us into accounts that we have on our list as named accounts. So these are all criteria that we have when evaluating candidates.
Right, very good morning to you, gentlemen. This is Cheryl also joining in the conversation. Joseph, let me actually come to you, and if you could tell us how the client conversation is actually shaping up. It would be great if you could give us your assessment on various verticals like digital and high tech. And why am I asking about these verticals is because peers have actually pointed out to weakness, especially in the high tech business.
So I'll probably take that, being a little bit closer to the market out here. And, if you look at our results for Q2 as well, you would see that, there are a few verticals that have done well, and there are a couple that have been a little behind. EdTech's been going through its own challenges, but what we've seen is that given our depth and, it's not an area where too many companies have depth, and it's one of our largest verticals. For other companies it would be like 2, 3, 4% of the revenues. For us it's almost 20-25%. So we build depth, and even though there are some challenges in this vertical, we're able to acquire customers and expand within the existing customer base, and that's grown quite well, as you would see from our results. You spoke specifically about high tech, and there I think you got to break it up into startups, late stage startups, mid-sized, and large companies. If you look at the large companies, and we've had quite a few of our wins in the high tech space actually during the quarter, and these are all large companies that have well-defined roadmaps and product strategies. So one of the prestigious wins is one of the largest retailer and hyperscaler, where we are helping them, with their IoT platform, doing some user interface and automation for them, and we see scope to expand out there. We've been able to break through, and we can see scope to expand. I think that's the strategy that we'll have to follow, because in any vertical, if you look at a broad level, there's enough demand for customers to adopt digital technologies and do digital transformation. I think the key is to look at which areas and which companies and which areas that you would focus on out there, to make sure it's something that is a area of need or competitive disadvantage or differentiation where you can contribute. Again, if you look at manufacturing, I think that's an area that's doing well, because most of these companies, they've been a little late to jump onto the digital bandwagon, and they're realizing that there's cost advantage, there's differentiation to be had, and better way to interact with customers. And that's an area that we see growing quite well, especially in India. It's an area where we're having a lot of traction with customers. Another area has been healthcare, which is, in a way you can say it's a little bit of an evergreen industry, but we do have, we've shown a strong growth in healthcare, and we have a pretty good pipeline of prospects that we are in discussion with from a healthcare standpoint.
Well, thank you so much, Joseph, for such a detailed answer that where the company is looking traction at this point in time. With this, we'll let you go on that. Thank you so much, Joseph and Anthony, for joining us today on ET Now and helping with the growth outlook for the company. So as of now, the company has cut the revenue growth guidance, but has maintained the margin guidance and looking at some acquisitions as well in the healthcare and insurance space. But a cut of 2.5% is what we are seeing. But with this, it's time to wrap this edition of Buy Now, Sell Now. It's a goodbye from me and Sharon and the entire team who put the show together. Thank you so much for watching.